Hello everyone, welcome to another weekly analysis by Crypto Whales Academy. We started our week with extreme greed in buyers while getting closer to halving day. Having greed in one hand and publication of positive fundamental data, including high volume of Bitcoin's ETFs on the other, make the path for Bitcoin ready to go. According to this report by Sentiment, the volume of Bitcoin's ETFs hasn't been decreased ever since 25th of February, when the volume reached its highest amount. The prediction of Sentiment, according to this report, is that this trend will continue until the halving day. If we want to have a glance at the market, Bitcoin's dominance draws our attention, which is quite normal for pre-halving period. But the point is, considering Bitcoin's sharp move today, the altcoins didn't show the same movement on their price. This makes us check the fundamental data regarding the altcoins' correlation with Bitcoin. This report shows a dramatic decrease in Bitcoin's correlation with altcoins, about which we had already talked about on Telegram Market Update Voices. This report makes it crystal clear that in the future, this trend may continue, and actually, regardless of Bitcoin's bullish movement, we may not experience the same amount of profits or even losses in altcoins. After covering important fundamental data, we are ready to move to the chart. And once we move to the chart, the breaking of this dynamic resistance line draws our attention. We had said that if the price surpasses this line, which was a high probability, it may touch 73,000 too. But this may have some corrections as well. So if the market wants to keep this trend and be bullish, it is highly probable that we may have a quick pullback to this line, which is a little bit approximate, and then go up. It is highly important that if the price wants to hit its all-time high again, it has to break this line, this static resistance line, with more power. And in our bearish scenario, it is highly probable that the price will descend to, first of all, its nearest static support line, having a pullback to this dynamic resistance line, and then decrease back here, maybe. But this is not that much probable. The main reason that I'm saying this is that we talked about this in earlier weeks, that as the price is getting compressed here and broke this compressed area from the above part, so the price has higher tendency toward being bullish. Now, the touching its ATH, it's just a matter of time, but we are not that much sure, and we don't want to dictate to the market whether it's going to happen before halving, or it may keep this, new ATH to after halving, and we are not going to be so much hard about that. As the price moves, we are going to accompany her. As we talked about, Bitcoin's correlation with other altcoins has decreased remarkably, so it might be a better opinion to look at the Ethereum's chart as well. And we are in the 4 hours time frame. Looking at Ethereum's chart, we can see that it has entered to this resistance area with so much reactions, as you can see. It entered to this area, but we are not that much again sure whether it's going to be able to break that. After a lot of efforts, we have seen that Ethereum wasn't that much successful in breaking this area. So we consider this 3,600 area as a very powerful static resistance line. So if the price wants to break through here, most probably we are going to need very powerful candles first of all, and after breaking, most probably we are going to have a quick pullback and then continue our bullish trend. And if the price wants to continue in this way, we have to see like this very big candles to surpass this area. And considering the bearish scenario, which is much less probable in our opinion, we are going to have a move toward this area, somehow 3,200, maybe a quick pullback to 3,300, and then we are going to put our stop loss to 2,900, which I said, according to the fundamental data, on-chain analysis, and the reports that we are having a bullish trend at this time is less probable. Thank you for being with us in this weekly analysis. We will be so glad to hear your ideas about this analysis and your own analysis in the comments section. And thank you for liking the video.